Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.5% there on the S&P. Looks like the NASDAQ semiconductor did make a move today with the 1% or more positive performances on those two. Dow pretty much flat. We got small caps and the banks. You know, the small caps and the banks, they've been making quite a bit of, especially the banks been unstoppable. So you can see that some of the money is flowing back into tech and semiconductor because it's been a while. It's been quite a bit last several weeks, maybe a month or two that NASDAQ and the semiconductor has been struggling while the banks been continued to thrive to the upside. So it looks like there's a little bit of shift that occur recently here. You can see the banks down 1.2% today. Energy is down a little bit. Transport's another one too. Transport, the banks just on a tear. They've just been making huge move. Continue to march higher. But today it looks like some of the rotation that has been occurring that as I can see that some of the funds are rotating maybe back into the tech and the semiconductor. But the champion for today's performance is the biotech and the pharmaceuticals. They're up about 2% today. They've been down quite a bit last month or so, but last couple weeks they've been really thriving, making a good returns and a good performance. And I've been tweeting things out on charts on the biotech and pharmaceuticals. Biotech broke above that triple bottom, broke above the neckline, breaking out. Pharmaceutical double bottom right on that gap area. Also, you can check my Twitter feed at 2Kim to see some of those charts and my comments on that. Emerging market is up about 1% there. Grayscale, Bitcoin popped a little bit. Good to see gold, silver, and miners kind of continuing with that momentum. They've been bullish for the month or two. And recently we saw a little bit of pullback, I think on Monday, but it looks like recovering the last couple of days. Especially miners did see a big day, 2.5% positive. Dollar pretty much flat. Oil up a little bit. Treasury bond up a little bit. VIX got hammered today, 10% negative. Let's stick with the spider 65-minute chart here. So its market has been there has been a lot of volatility, a lot of up and downs, a lot of shenanigans. And it's crazy because I've always hear this every single day that market is crazy, market is lost its mind, or there's too much shenanigans. It actually isn't. This is just a normal market fluctuations, right? This is just how the market operates. And there will be time market will see a smooth rallies. But trust me, more often than not, you're going to have to deal with these lethargic, up and down, kind of a volatile, choppy market. Usually that market gets into this mode for a while, especially in a seasonality-wise. In the summertime, more likely we're going to get into, especially the prior year and the earlier that year, before the summer, if it has been a good year, that summer tends to be kind of choppy, lethargic type of environment. But you can see market is faithfully, however, been making a move. Even this month, last month or so, we threw that double bottom here. There's that neckline, perfect retest of that neckline right on that gap area, right? And then you can see, looking at things in overall picture perspective, this market has been faithfully cultivating higher highs and higher lows. So, the best way to approach this market is not to be too intimate in the micro term and the short term fluctuations, but to understand its midterm and overall trend of things so that you give it some wiggle room, right? Instead of panicking every single day, because market is bound to go against you if you're betting on each day's fluctuation. That will be same thing as pretty much gambling, right? So and I see that all the time, that people doing that. Oh, tomorrow's gonna be down day. Oh, tomorrow's gonna be up day, down day. I bet if you put that in a spreadsheet, see how many times you made that work. I bet 80% or more you're wrong trying to pick the red day or down day or red day, green day each day, trying to make a living, profiting in that strategy. That's not going to work, right? This is a reason why I always emphasize on sticking with the long term, right? Understand the intermediate term and the primary, and let the market kind of wiggle through, right? Giving the benefit of the doubt. So looking at the short term here, so we're seeing that short term higher lows. My short term moving average is continuing to act as support here, as you can see, and this gap continues to be protected. There are about several days of an attempt. You can see here those 3 attempts to fill this gap, and I talked about this on the weekend analysis video, that as long as this gap remains open, we want to continue to give benefit of the doubt to the buyers, and the market is going to favor the buyers, right? And so even though there was some, gap up tankage, gap up slide, gap up shenanigan, and then got right back up, there has been a lot of it in the last several days. And I think as the market is preparing for a breakout, I think. But at this time, market is never gonna make things easy. I mean, market never. When was the last time market made anything easy for you? When you say, well, okay, last trade that I've done, it was actually kind of easy. Well, because you got lucky. That's why, right? Trust me. Whenever you feel like, oh my God, that was such an easy trade, right? Because it was a blind, dumb luck. But the longer you stay in the market, the longer you refine your strategy, you realize it's never easy. It's always challenging. Market is going to always throw something to make you think and worry and be anxious about. There won't be a day where you're going to think everything's just perfect. Everything is just so perfect. I bet if you feel that way, that's probably time to sell. So in the short term of things, I want to continue to give benefit of the doubt to the buyers, especially we are staying above the short-term moving average and being acting as support several times this week. We did cultivate at higher highs. We stayed above it, and that's a good sign, right? You can see that big gap, and we saw a rally here in the first hour. Let's zoom in here and talk about that. There is some shenanigans that happened first too. Look at that fluctuations there, right? You can see that. I can already see what's been going on. You can see these short term, these chasers chasing after this move, right? And then as soon as they start coming down, they're panicking here. They place their stop right here, and their stop's getting taken out. Right, as soon as they're getting stopped out, this thing gets back up, and bulls worked really hard to get back above this micro term pivot as new support. So despite the fact that big fluctuation on the second hour, because at one point this thing looked pretty darn red. This is what it looked like. I'm going to color this here. This is how it looked like at one point, right? It is no coincidence. It is no mistake. It is not a random occurrence. They found support right on the short term. Got up here, third hour. We stayed up, fourth, fifth, sixth hour, little fluctuation, but obviously that micro term support held, and a little bit of move there to the upside. So let's see if we can hold this micro term support at 423. Going into tomorrow, we got 422, the short-term moving average currently residing. It is rising, so let's continue to give benefit of the doubt to the buyers. Let's see, let's try to extract more information, checking out that oscillator. I have 2 oscillators here. There's a reason for it, because I wanted a second, eye of a recommendation, the sentiment of this market. So you can see this is my main oscillator and my favorite oscillator, and you guys see me using this oscillator quite often. And this oscillator is secondary. Sometimes I like to kind of look at both, because you can see on this oscillator we actually saw a cross here. It doesn't look fully confident yet, but nonetheless we did saw a cross, and obviously this one also do have higher highs and higher lows, and this oscillator is in an uptrend. So you can see this thing did see a cross. However, my main oscillator didn't see a cross yet. So it's a little bit of not divergence, but discrepancies there. And we're still, the bears are still threatening the bulls here with this bearish divergence. We don't have that on this oscillator, right? But we do have that on my main oscillator. So we still have that potential bearish divergence. Bears continue to threat the buyers. They're going to push it down. And I think even with this gap up, and you see that attempt that happened on second hour, And so we're seeing that yesterday, and 3 days ago. And we've been seeing a lot of these shenanigan gap up, gap down. So I think we're at this pivotal juncture. Either we see a big upside breakout, or we could see some more shenanigans. But first things first, we do need to see this oscillator getting back up here and crossing up. If we can see something like that with a confident look cross, I think there's a good chance the market is preparing itself for a much bigger move to the upside. My secondary oscillators already kind of gave us that cross, but not confident yet. We're not seeing big spreading out to the upside. It doesn't look anything like this yet. So I'm going to continue to kind of keep an eye on this. We'll follow up. We'll go from there. You guys enjoy the rest of this evening, and good luck trading tomorrow.